All right, what's up, everybody? How's everyone doing? Everyone having themselves a good afternoon? Nice, Darren. What's the exercise routine? I like that. I've been a busy day here. We'll get some fresh air here soon enough. Thanks for asking. What's up, Dave? How you doing? All right, so let's kick things off here. Who wants to fire away with the first question? What do we got? Anything? Anyone? Well, were we wrong on it being a downtrend? Say no. I don't know if I agree with that, Dave. Yeah, I mean, if someone wants to email me or send me their trade, it would be happy to go over it. Absolutely. So I've reduced my contract size to 2 to reduce emotions, but still find it when I'm in, or still find emotions when I'm in. Is this from not fully understanding how far it's going and not having my 3 to 1 range fully in mind? Having anxiety in a trade can be a multitude of reasons, right? The thing that you're probably missing is what kills my idea now that I'm in a trade and what tells me that my idea is strong. So this week we've kind of talked about a new addition, right, to what makes my idea weak, right, which is the retest of my entry price more than once post entry, especially after some separation. So, being aware of what that looks like prior to an entry. And then, after that, right, it's about looking at the candlesticks, right? Am I getting the right candle shape, the right volume profile? Am I holding higher highs? Am I holding lower lows? Defining that before you enter a trade so that you can basically play out your plan. My theory, and this is just a theory, is that anxiety in trading starts to happen when we get answers to questions that we didn't know we should have asked. So if we start getting answers to questions that we didn't consider prior to entering the position, that's where we start to get that emotional reaction. And then, kind of what we do once we're emotional becomes a little bit random. So I think today on entries, right, there was definitely some slippage out there. There was a pretty wild spread, and that can be exaggerated for a lot of reasons. So, if you were using market orders and you're buying, as prices going away from your stop loss, not towards it, right? A 1.5 point spread or a 1 point spread could easily become like 4 points of slippage. So yeah, absolutely, that's something that could have happened. If you're using limit orders, did you ever get an execution above your limit order price? It's not what I asked. So did you get slippage on your stop loss? Is that what you're saying? Okay. Well, stop loss is a market order, right? It's not a limit order, so that's expected. You didn't answer my first question on your entry, Dave. Did you get any executions above your limit price? So, like, if you set your limit order at 30.27, did you get a fill at 30.29, for example? Because if you used a limit order, then it would be impossible for you to get a fill higher than the price that you had set. Now, if you're, below that price, right, and you click submit and you still get filled at, 30.27, that's not slippage because your limit price was 30.27, right? So can't if you're saying you use limit orders, then you wouldn't have gotten slippage on your entries. You would have gotten filled at the price you set your entry at, or not gotten filled. On your exits, right? That's where you would have seen slippage. So just trying to help you refine, right, what that definition is so that we can diagnose the problem properly. Not with a limit order. With a limit order, you're saying, I only want to get filled up until this price. All right. Limit order, you're literally saying, fill me up to this price or better. Yeah, see, that's not slippage though, Dave, right? Slippage is the difference between what you think you're executing at and what you executed at. What you think you're getting executed at, right, is your limit price that you send. So if you're saying you got a difference, like, you were clicking submit and, it was 325 and you got filled at 327, then that means you bought it as the price was moving away from your stop loss and there was limited liquidity. So you got filled at your limit price that you had set. Yeah, but I don't think that that's a market dynamics thing, right? When things are moving quickly, though, and you click on the uptick, right, or as it's moving away from your stop loss, you're more likely to get filled at your limit price, right, not below. Because when things are bouncy and choppy and giving us like those quick movements, right, and a large spread, there's always a big gap, right? So if, the spread on the trade at times was 1.5 to 2 points. So that means that you're already seeing 20% or 15% difference between what price you're seeing on your screen and what price you can actually execute at. I don't know off the top of my head what my biggest P&L day has been this year. I don't really care about what my day-to-day P&L is. My biggest month has been like low six figures. But I'm not judging myself on my day-to-day P&L. I care more weekly, monthly, quarterly, yearly. Goal here is to basically maintain a 0-0 mindset, right? If I start thinking too much, oh my gosh, I've made so much money here today, or oh my gosh, I've lost so much money here today, and it's not super sustainable, and it doesn't carry over very well to the next day. How did I get my mindset to shift like that? Well, it's really simple. Eventually, you get enough evidence that judging yourself on your day-to-day results is actually slowing you down, not speeding you up. And so you have no choice but to judge yourself on a longer outcome. The other reality here, right, is that variance is an absolute prick, right? It will bite you in the ass a tremendous amount if you give it a tremendous amount of control over your emotions. So the only way that you can fight back against that P&L roller coaster is that you judge yourself on your process, not your P&L. So on a day-to-day basis, I'm judging myself. Okay, did I get entries within my entry zone? Did I stay within my max risk? Did I close as my P&L is increasing? Did I follow all my setups, right? Did I execute my strategy? Like the things that actually make you profitable long-term. And I judge myself on that. So a good trading day isn't a big P&L. A good trading day is, did I follow my rules? Did I behave how I expect? Did I learn something from how I traded today? And so just getting addicted to that process is how you get out of that P&L roller coaster. And then, on weekends, When you've got time at the end of the month, every quarter, you can then review your P&L and say, okay, like, is my process actually giving me the results that I expect, or is it not? But for me to judge myself on my day-to-day P&L is pointless. I'm never one day away from being rich. So why do I care so much about what that day actually gives me? Why not just focus on the quality of my process and optimize for the bigger win? And it's not because I want to, it's just that I have no evidence that doing anything other than that actually makes me any money. Well, everyone has a different number that breaks them, right? So everyone has a number of trades that they can take before they go on tilt. Everyone has a max loss that they can take before they go on tilt. Everyone has, time of day before they start to like lose their energy. So this is where you got to start, studying your own trading and studying your results and be reflective, right? If you see a pattern, okay, every time I take 4 trades, my 4th trade is a loser and I go on tilt and then I end up, blowing my account. There's your number, right, of max trades that you can take per day. If you notice that after every $500 loss, right, you go on tilt and you lose control and you have to revenge trade and make it back all right away, there's your answer. So the answer is in your data, it's in your journal, it's in the facts that you gather about your trading, not in the feelings or perceptions you have about it. So I can't answer that question. Truth be told, it's very personal to each individual because everyone has a different starting point, everyone has a different reaction, everyone has a different trigger. And it's your responsibility to figure out what that is and then design your rules to make sure that hitting that becomes effectively impossible. What I will say, though, is that most people overestimate how much risk they can actually stomach on a day-to-day basis. They think that they can stomach $500 worth of risk when they can actually stomach 200. And you generally have to humble yourself and slow yourself down before you can actually alleviate a lot of that risk management kind of concerns or that bad psychology. In my opinion, a good trading psychology is proactive, not reactive. So once you've gone from being a logical and rational trader to being an irrational trader, there's no like words or magic numbers or formulas that will snap you out of it and get you out of tilt. So your job is to prevent you from ever getting to that point in the first place. And that means studying the patterns that send you over edge. And your trading journal is going to be where like your secrets are, right? So I say this all the time to people, but your job as a trader isn't to trade. Your job as a trader is to collect data, to study it, learn from it, and to design new experiments that you can improve. If you apply the scientific method to your trading results, quite confident you'll get a tremendous improvement long term. The framework you want to basically do is for each trade you take, review it. What's one thing I did well? What's one thing I can improve? What's one thing I can focus on for tomorrow? And then you take, say you took 3 trades. Well, you'll have 9 things that you've got from that. And then the following day, you can judge yourself against that criteria. How well did you actually accomplish the thing that you wanted to focus on for tomorrow? How well did you accomplish the thing that you could improve? How well did you maximize the strengths that you showed in those previous decisions? And then, like DC is saying there, your journal becomes your cheat code because as you start to write out your thoughts, as you start to study and track your patterns, they become more obvious to you. And you start to see the warning signs before they ever happen again. And when you hit those warning signs, right, this is your opportunity to basically accomplish your new test objective, right? Instead of going left, you can go right. Instead of, full porting a trade, you can walk away. You give yourself a new point on where you can make a decision prior to the one that's going to cost you your account. So it all starts with awareness over your process. Yeah, and then just review those in the morning, like you're saying, Dave. And yeah, judge yourself based on the quality of your process, not the quality of your P&L, because your P&L will always be noisy. And to a certain extent, you can't control it on a day to day basis. You can only control it over a longer term. So it's reverse engineer that, right? If I was a profitable trader making $10,000 a month, what would be the habits I have that I would be executing my trades on? And that wouldn't be, oh, I've got the holy grail strategy, or that wouldn't be, I don't have any losing trades. That would be, I'm keeping my losses small. I'm closing my wins as my P&L is increasing. I'm not getting emotionally attached to my decisions, right? Whatever it might be. So that's the thing to optimize for. That's the thing to care about. That's the thing you want to really put all your focus and energy into. And that's what's going to get you paid. The P&L roller coaster is no fun. It's like getting slapped around by an abusive ex-wife. She'll beat you and then take half your money. Not a good deal. Well, if you're coming from an overcorrection in one direction, right, you naturally have to overcorrect in the other. And then eventually you keep doing that work, you will find that happy medium. So you're looking at FOMC drop today, Dave? Like it's that's not worth chasing that rush. Yeah. So like chasing that algo rush, it's not worth it. What are the questions we got here, team? What else we got? It's been a good day of questions here so far. Much appreciated. Me too, DC. It's one of those things where refined focus is better than just punting and hoping good things happen. Anyone else here? Again, Dave, like I wouldn't beat yourself up about not catching trades during FOMC or in the FOMC rush, right? It's literally the most algo driven trading that exists in this market. So again, like why would you yeah, like your expectation of getting a fill and a good fill is not great. And then, you spent the first half of this talking about how like you weren't happy with the slippage, and then you're annoyed that you didn't get an entry that would have given you twice as much slippage. So it's like hold yourself to a standard that's actually winnable. Don't box yourself in a situation where you're damned if you do, damned if you don't. Like there's no value in torturing yourself with hypotheticals. Who cares? Move on. There will always be another trade. I don't ever place expectations on price action. All I do is place expectations on myself. That's it. I can't control what price action does, so it's not worth trying to impose my feelings or thoughts on it, right? Just going to trust my plan. I'm going to trust my technique and let everything else play out. Like if I had a crystal ball, I wouldn't need any risk management, right? But don't have one. No one does. And so all I'm going to do is trade the price action in front of me, not what I think the price action is going to do, and I'll allow my rules to tell me what to do. The whole point of systematic trading is that it doesn't matter how crazy or how volatile or how sporadic or whatever, how sticky price action is. The only thing matters is, did you follow your rules? Did you execute how you said you were going to execute? Did you behave how you said you were going to behave? That's it. Nothing else matters. The number one rule of systematic trading is that you follow your rules at all costs, and the market will always give you a smart sounding reason to bend or change those rules. So if you don't give the market any smart sounding reasons, it's a lot easier to stick to your process. And so I don't care if it's trending a million points higher or a million points lower, or if we're stuck in a 50-point range. I will just stick to my process and follow my rules, and I won't impose my feelings on what I think the market is doing into my trading strategy. Well, you got to choose what pain you're willing to suffer, right? You can suffer the pain of discipline, or you can suffer the pain of regret. Both are going to be psychological. So you just choose which one you want, right? Do you want the devil or the angel? So it's like you're choosing to make a psychological decision regardless of what you do. You have more power over that decision than you give yourself credit for. So optimize for the one that gives you the outcome that you actually like, and the one where you're in control over that decision. What else we got here, team? Any other questions? I don't know what that means. Is that like a chip upgrade to make it faster? Is that what you're saying? I mean, truth be told, dude, that car's fast enough. I do 0 to 100 in less than 3 seconds. Like, I don't know. If I go too much faster, I'll wrap myself around a tree. if I ever get like a real sports car, I mean the RSQ8's a sports car, but it's an SUV, right? So I don't want to like try to mod it and pretend that it's something that it's not. That car is super comfortable. I found it to be extremely reliable, not had any issues with it. So no point changing it into something that it's not. If I ever get like the intrusive thought in my brain is I want to get an old 911 and resto mod it and do all that kind of stuff. If I ever go down that path, then I'll for sure look to do a bunch of the tuning and get it to feel like an actual sports car. All right, any other questions here, team? Anything else we want to go over? Darren, just want to say, man, thank you for your email here today. Appreciate that. And you should be thrilled, man, of the hard work that you're putting in. It's amazing. I appreciate that. All right, guys, we'll go final call for questions here. Final call for questions. All right, guys. Well, if no further questions, I'm going to kill it here for the afternoon. Same deal like always, right? If you have any questions or tech issues, raise it to backoffice@daytraderfunding.com. And I'll be back at it again here tomorrow, DTR after dark and live stream in the morning. So I'll see you guys then.